What's going on, people? It's your boy Hake Learning TV and welcome to another video. Well. It's another day again, another trade. We got a couple sessions that was absolutely amazing today. Well, we're going to go over those today, and also I'm going to tell you exactly one trick I use to help me stay consistently positive in the market. So wait until the end, and I'll share that secret with you. But enough of me rambling. Let's jump into this review and see exactly what happened in the market today. So starting with first, this is a daily chart. First thing first, we see I annotated all this on Monday and stuff. I was expecting price to go to this order block. You saw me. You saw the trades I took, and then I was expecting price to come down lower here, and this was today's candle. Then I was expecting deeper prices, and I'm going to show you why. If you notice this fair value gap here, this is a daily fair value gap, the consequent encroachment, and you see how I was able to reverse a trade based off of this idea. So when the market opened, I was expecting prices to trade down to this point. Now, how do I frame my trades? So this is what we're looking at today. Around 10, I wait to 10 before I enter my trades now, because I want all the 30 minutes of the market opening. I want the market to do whatever gyration, taking out stops and all that stuff, and actually tell me a direction it's going before I actually enter. So 10 o'clock, there was one news and he did all this. I was like, okay, cool. I was expecting prices to go lower. The reason why also is, if you notice here, the new week opening gap low, price touched it, and this is the opening range gap low. Price came down, touched it again. So I was expecting price to trade to this point, which is the consequent encroachment of this daily fair value gap, which is this yellow line right here. Now, some liquidity here was swept, okay, and it literally tapped like to the tick the high of the daily gap, and then this massive, you see this nice displacement. What did I use to frame this trade also was because of my DXY. If you notice here too, DXY was gunning for the highs here, right here. You see DXY was gunning up. I was like, okay, now I didn't even need any SMT or anything as such. I just dove into this trade. Now, what happened next was I entered here. I'm going to show you my executions because I know some people. So this is just my account I play with. So what I do is I play with this account. I try to get it to as high as possible as I can, and then I'll reset it, put myself in a deficit, get as high as possible as I can. Sometimes make like $40,000 in profit or 50,000, reset it. But my real account, I use MetaTrader 4 and 5 for my trade. So this was the first trade here. The second one was right here, and then literally price. So the reason why I also noticed that price is not going to take me out was, if you notice, this is 1, this is 2, and this is 3. So my stop loss was literally above here. So if you want to be extra safe, what you can do also put your stop loss above here. So enter there, and then literally price just came all the way to my take profit. See, right to the tick, right here. And then I reversed the trade, but on the reverser, I use SMT. I'm going to show you. It's literally the same thing over and over and over every single day. So this is it. It's literally the same thing every single day, and I keep saying it. You just need to show up. That's what ICT says, and you have to do that, because if you don't show up, and it has to start getting boring. I know exactly what to expect. I'm not scared anymore, and literally got stopped out. Price gyrated, and this is SMT. SMT again. I was expecting prices. I was expecting price. Why do I keep saying prices? I was expecting price. If you see this fair value gap, draw a Fibonacci from that to the consequent encroachment, and you see it got to the 25%, the 50%, literally got there, and it fell all the way back down. So when I saw this, I was like, yep, it's going for here. And I saw inefficiency here, inefficiency here, these fair value gaps. And again, if you can see this order block here that came from this fair value gap. So there were so many things that was telling me price is going all the way back up here. So what I did, I entered in my actual account. I entered here, and then price started going up, and at this point in time I had to step out. I went out for a walk, I entered, put my stop loss here, and I put my take profit. I knew exactly what I was looking for, so I went out for a walk. I was like, there's no need for me to. I was like, well, I'm going to enter another trade if it comes down here again. But I went out for a few minutes walk. Before I came back, price was already here. I was like, you know what, I'm just going to leave it. But my actual real account, I entered it and then traded up here. I took my take profit here, and that was lunchtime. Then I just, left the market and stuff. So another thing also here I wanted to show is this point, because I entered twice on my real account, was here. There was a mini SMT here. Usually people will enter and put the stop here. And that's why I say I do not always put my stop at the swing low. The stop have to make sense to me. I can't just take any stop just because there's a stop there. I'll just take it. So what did I do? And I'll give you the reason why I put my stop all the way down here. So price traded above, what's the first inefficiency you see? You see this, 1, okay, 1. You see this low here, 2, okay, and this 3. Somebody can say this 1 here, but you can use that and that will stop you out here. But me personally, I try to start counting like all the way from where price, the leg, the initiation of the leg. That's why I start counting from. So I use this 3 and I placed my stop remained there. I was like, well, again, the daily consequent encroachment is here too. So prices most likely also want to gyrate to this, give some more discounts, give some people some more discounts so they can buy some more before taking it all the way to the 25%. So I left it there. I put my stop here. I never moved it. And literally in a few minutes, price went to my take profit. Now we go to the afternoon session, the PM session, which is arguably one of my favorites. 2:30 and SMT here. Lower low, lower low, higher low. Okay. Break of market structure here, here. And then again, I was expecting price to go higher. Honestly, so do you see this purple line here? That is a 15 minutes. This is a 50-minute swing high. So that was what I was targeting. That was my target there. And I said best case scenario is going to get to this opening range gap low. And in most cases, whenever it leaves that, it tends not to go back. I've noticed it. But there's a chance that anything can happen. And this is FOMC week. So, you can expect anything to happen in it. Literally got in here, tipped me in here. And like 1, 2, 3, 4, 5, and 6 minutes, I was in take profit. Now, what I wanted to speak to you lot about is this. Whenever you're trading and you make 2 profits in a row, in fact, I'll say 1, once you make profit, stop trading. Just go about your day, or just paper trade, or just, tape, or just close your computer and do whatever. Go play with your family and whatever. Because you can get into a gambler's mentality. And this was what almost happened to me here. So at this point in time, liquidity was taken here. Honestly, I shouldn't even be taking anything again, because this is nowhere near a discount. Since liquidity is grabbed here, I should be looking at lower prices. But no, I wanted to be right. I don't want to be right. I want to make money. So I was like, no, it's going to go here. But again, if you've traded the market for quite a bit of time, and that's the reason why I have 1, 2, 3, 4. I have the DXY, I have the Dow, I have the Nasdaq, and every single time I look at all 4 charts, and you understand if certain things are supposed to happen, there's certain things other asset class supposed to do, because if DXY is going up, I'm expecting the other asset class to go down, and if Nasdaq is going up, I'm expecting Dow and S&P to follow suit. So here, price came, tapped me in, went up, came down, went up, and he kept doing this. I was like, okay, this is absolutely crazy. I quickly rushed my stop and I put it right here. And when price came, So my stop was originally here, but I cut my stop by like, I took about 60% off of my stop. So I got stopped out in a loss, but it wasn't the whole stuff. It was about 40%. So you were risking $1,000. I got stopped out for 400. Cool. Now, I was like, I've got to get my money back. And that's the thing. Technically speaking, I think I got it. There's still some things that I can brush up on, but I think technically it's not the problem. I think psychologically is what me and a lot of people, I'll speak for myself. For me personally, I think that's what I really struggle with, because I think I know what I'm doing. So therefore I demand so much. I must get certain things done. And then we got to this point here and I took the buy here. Okay. Took the buy. Instead of me to take my 400 that I have lost, I was like, no, I want the entire thing. I want $2,000. Like, but anyways, I was very diligent with my stop loss. Why? Because it was during the close. It was literally like a couple minutes before 4 p.m. So I jammed my stop up, and of course I got stopped out here. Now, what is the lesson for today? Lesson for today for me is, if you are somebody that you are not patient enough, you want so much more from the market, I'll say take one trade a day and be done with it. Because if you're trying to go and just keep sniping, you are going to shoot yourself on the foot. I took this and I took that, and honestly, that should have been it for me. But I wanted to also, test myself. Like I said, sometimes I try to push the envelope too much. And again, my real account, the only 2 trades I took was this, and I was done. But here, I literally go crazy. Hopefully you find this helpful. Let me know if you got any questions down below. Again, it's the same thing. I've explained what exactly I'm trading down to you, Lord. Check the past videos. You're going to see what I'm doing. I'm using SMT and DXY concurrently to do my trades. If you haven't seen ICT stuff, go to his channel and watch. You need to study. You can't binge watch. You can't just do Netflix and chill with ICT and chill. No, you have to study, go over the video. Sometimes I go over those videos 3 or 4 times in order for me to understand exactly what he's saying. Do that and then work on your psychology, and you'll get everything sorted out. Anyways, that is it from me. Tomorrow is another day. Tomorrow is Thursday, so I'll put that video out on Friday. I'm trying to work on something to keep, whenever I produce a video, put it out the same day. But once I get that sorted, I'll be doing that. And then Friday, we'll see what happens on Friday. I am personally not going to be trading it, but if there's something that I can, study from it and share with you lots, I'll do that. Thank you for watching. Thank you for all the support. Leave your comments below. If you're new, hit that subscribe button, of course, and leave the video with a like. And I'll talk to you guys in the next one. Peace.